Alright, welcome to my first video discussing my strategy for generating passive income. And there's nothing unique about this technique per se of generating passive income, but the idea behind it is that I want to have other streams of income beyond my work income to pay for my household expenses. And so what I'm trying to do is I try to look at what is the average amount of money that a household needs, at least for the United States, to cover expenses. And in my situation, I'm not in the average. My expenses are actually a little bit significantly higher for the house, but much lower for the car. But I went ahead and looked at them, and I wanted to see how long it would take me to reach these norms. And what also I need to add in here is food and like household expenses for food for a family, an average family. I need to also add in the average expenses for electricity and entertainment, etc. But that way, the global picture I'm trying to do here is try to get passive income that would pay for the entire household expenses, so that frees up the income coming in from, say, employment to be added to further investments, whether you're investing more in passive income to increase the cash flow coming into the household, or taking that money and investing in someplace else, whether it's like for growth opportunities, etc. In the scenario I looked at, it's so in this situation, the average household requires about So in this scenario that we looked at, the average household requires about $2,000 per month in income coming in after taxes to pay for both the house and to pay for their car, for one car. Now I didn't have two cars in this scenario, so I've already achieved this, and it's pretty neat how it came about. So we'll go through and look at the pieces that make up my passive income source. But this right here, this chart, total monthly income. You can see that when I started out, I was almost there, that 2,000, because I have a rental unit. So the rental unit provides this very stable engine. So I have one rental unit that's just paying about $600 per month, and it's great. And then during COVID, I was trying to find a way to buy a second property, but the prices were just going up. And I came across, and I had approached this before, looking at dividend-paying stocks, and I revisited that kind of late, unfortunately, in 2022, but revisited that idea of looking into stocks as providing income. And I found some monthly paying stocks, and they had high interest, or they had high yields. And I went ahead and played with some of those, which we'll get into, but they definitely have increased the amount of income. As you can see, it's gone up since about this period right when I started investing. The income started swinging upwards. So here you can see this is the total monthly income coming in. So in the first year, I went from, typically with my rental unit, I was making a little under 20,000, but I've added $17,000 on top of that, or $18,000 on top of that, and I brought the estimated average income to $3,157. So we have already achieved in the first year that idea of covering the average household expenses for at least the house and the car, and I've continued on for this year, and we went from 3,000 to about almost 6,000. So we've almost doubled that playing these. And I've had a couple losses. I'll be honest, I had a couple losses this year with some of the funds I've picked that I'll definitely discuss. And then I also had a little bit of fear with some of the stock, which maybe I'll discuss also. So I exit out of those positions. And so now I'm kind of gravitating towards this more looking at other successful, I'll say this, I'm looking at other successful investors and what they've been investing in for monthly income or for passive income. And so I'm starting to mimic their more stable stocks as I grow my portfolio larger and then give myself an increase every year of about 8 to 10%. So if I'm making, let's say, $60,000 in dividend stock, then I'm hoping that the next year I'll make $6,000 more, and then keep going from there. Just keep raising up, so it'll be 6,600 the next year, and not including what I'm contributing to the fund. And I have an ultimate goal, and this is $30,000 per month would be ideal. It's higher than what I used to have. I used to think I'd want about $7,000, which would be 84,000, which I'm really close to. But the reason I've moved this monthly target up is that I want to have extra money coming in per month that I can use to allocate towards other investments. So that's why it's at 30. Like that would free me up with about $20,000 to take opportunities in market swings or to buy more passive income to keep waiting for those opportunities to come up. But let's go ahead and take a look under the hood of the money machine. So on the money machine, this looks kind of like a rent roll in a way. So you can see there's so many columns because I do have a lot of funds in there. So all the funds are listed above. This is my rental unit in green, but these are all basically the dividend paying stocks. These gray blocks you'll see here where there has been no payments. And in a lot of these cases, it's because I didn't own the stock. So you can kind of guess, like if you're looking at this first one here, you can say, oh, you didn't have it for like the first year, basically. And this one I got this year. So you can kind of see when I pick these stocks up. It's not always true in the case because I do, and again, you have to look, I've made these little modules when they pay. So some are monthly, some are quarterly, and I have a few that are yearly. With the yearly ones, it's a little harder to use that idea of when I picked up the stock based upon the blank, because I could have maybe picked it up, way before, but if it wasn't in that period for that first year, then it wouldn't show up. If I wasn't by that the ex dividend date, they call it. Ex dividend date is basically the date that you have to own a stock to receive that payment. And if you're not within the ex dividend date, it goes to the previous owner. So, but most of my stocks are monthly paying. I have a couple quarterly paying ones, and I have a couple yearly. The yearly are not really major positions in here. They're kind of like Hail Marys that I did in 2021 because I was reading about where the markets are going, and the markets are really going towards China and India. So I was picking up these closed-end funds that pay yearly, both for China and for India, hoping that the dividends would eventually go up for those, even if they're paid yearly. But I call them my bonus checks because they just come usually at the end of the year. Um, the quarterly ones are just maybe some older funds that have been around for a while. I think they're Naveen funds and a couple other ones that are quarterly. But a lot of my stuff is monthly just because that's the way bills have to be paid typically. So I wanted to go that direction rather than having to manage money in a bank account for the quarter. So let's go ahead and take a look at some of these funds. So the top, I haven't filled out all of them because I got kind of lazy, but I have the stock label at the top, which is hyperlinked usually to the stock. Here you see it's not. So when it's hyperlinked, it'll pull up a page for it. Goes to Seeking Alpha. So, Acre refers to Ares Commercial Real Estate Corporation, and it pulls up a nice map. You can see over the year it's been pretty much stable value. Haven't lost much, haven't gained much. There's been a couple buying opportunities here in April. One that it's been very stable. Looks like it's taking a little bit of a dip now. Then you can go over 5 years and see the major dips. You can see COVID coming in, taking the value down, becomes the best buying opportunity, and it returns back up to its price, and then it's kind of come down a little bit, buying opportunity again, and then kind of an upswing. And then I like using Seeking Alpha because it lets me read what other investors are looking at. It also lets you see kind of the dividend yield for it. So if you click on dividends, you can go to, let's go premium dividend history they probably have. So you can see the dividend history over 5 years, paying, and the distributions are quarterly. Sometimes they have special bonuses where they pay money, so that's a quarterly paying one. See if they give the yield. They do. So about 12.87. They have to unlock it to see the rankings, but I actually pay for this, so I'm surprised I'm not logged in, but At least it lets you see kind of the under the hood for this, for Seeking Alpha. So look at Seeking Alpha. Sometimes I'll link it if I can find another website to link it to. I also classify it, so it's a REIT. Margin requirements, so if you take a margin on it, I know what the margin rate is on it. I try to see how much I've recouped from my price. So I've already made back, and since I've owned this, about 6% of what I put into it. So I don't know how much I've invested, about 7,000 or no 2,000, sorry, 2,500, and I received back 155. And you can see it pays quarterly. And there was that special distribution of $80.19 versus the 15. So it's nice to get those quarterly bonuses. So theoretically, if you know it's 14%, you know you'll get back your money in about 7 years probably. So, and then it's fully paid for. I like that strategy, so I try to look at those. So it's a pretty good rate of return for rental units or commercial, so or commercial real estate. Okay, so I have more up here: AAG, and C. So we're gonna look for the ones that kind of are my major bases. You can see I have a lot, and then if they're grayed out, that means I've exited out of them. So BBDC I've exited out of, and BITO I've exited out of. And sometimes I exit out of them because of the margin requirements were 100% because I do have some margin on there, or I exit out of them because their yield wasn't that great. I've been trying to make a checklist, and I haven't done this yet, but a checklist for me to make decisions on when I want to purchase a stock or when to sell it. In this case, BBDC was very, reasonably stable. I was losing a little bit of value from when I sold it, but it was constantly paying out. But its dividend rate was only 7%, and it was very sluggish compared to the other funds. So I think I exited that one for that reason. So I exited that very early in my game to move it to other funds that I thought were maybe better producing. So this gives you kind of a story of why I left a fund. So let's go ahead and look up here at the top. I'm just going to look at the lifetime sum of the funds, and we're going to look for something that's a little bit a big piece of mine. All right, well, here's one, CLM. So CLM is a Cornerstone's fund. I'm kind of debating about whether or not I want to stay in this one. It has a high yield of about 18 to 20%. I have about $70,000 invested, but it's gone down a little bit in value. I started off, this is what a lot of other people played, and so I joined it. You can see I was making about $100 consistently, and then right about here I started putting more money into it. So now I'm making about $1,000 per month. So CLM has some interesting properties. You get what's called the NAV and then the price. And right now the premium to discounts, it's on sale. 6% is actually quite low. Because usually what happens is usually trading about 20% above the NAV, net asset value. So if you wanted to build your own Cornerstone fund, it would be about $6 for you to build it, but you're paying a premium because it's an attractive fund, so people want to buy it. So as more people want to buy this, the premium might go up, where the net asset value doesn't go up, so it's independent of it. I got into this fund. 782 looks like was my price. Like I said, I'm thinking about moving this because I think there's other funds that are more attractive for this, but this one does have some interesting properties because if you do the dividend reinvestment program, going back to, close back up, the dividend reinvestment program lets you purchase it at the NAV for any of the shares that this company owns. And then every now and then they do what's called a rights offering. And when that happens, it's usually when this is above 30%, but then you could sell your funds theoretically once they make that announcement and still get like gains of 20% and then repurchase it when everybody else starts selling all the right offered ones at a discount, because I think the right offering lets you buy it at maybe 10% of the premium. But I would like to, like I said, I think I want to exit this one because I want a little bit more passive income where I don't have to worry about actively watching it. But this is definitely one I play. CRF is related to it, and again, it's just me trying to learn the two. I've entered CRF, and it looks very much the same. It's like it's invested in slightly different stock, but you can see this one has 8% premium, 649, but it plays the same game. So I thought I would play these both with the same strategy. They pay monthly. You can see the dividends I'm getting about combined, about 1,400. DDF, I didn't sell it. Actually rolled over to a new fund name, but it was an interesting fund. It was managed really well. ECC was one of my favorites, but I ended up selling it. So you can see I made $5,000 off this one. Also, this one was like a money printing machine, but I ended up selling it because of the margin requirements being 100%. So it was really hitting my account hard to hold it. GHY is a new one. I don't have very much information at this point on this one. The reason I bought it was recommended by, see it's very small, I'm making $12. I don't know if it's monthly, but GHY was recommended by this other investor who's been doing this for a long time, and he used to work for Standard & Poor's, so I picked that up. Glow I sold, GOF I sold. So you can see the ones I sold. Let's look for some high yield ones, or ones that make up a majority of my count. VRL. So this is one of my favorite ones. This is another real estate based one. But you can see I made 4,000 off that, and I get these. It's almost like a quarterly basis. They pay monthly, but their high distributions are on the quarters. But I really enjoyed that one. I have not lost. I've been since I bought into this one. I've always throughout the year I've always been up on it. So I've also had growth because it fluctuates between $19 and $25, and so I picked up a couple when they're on sale. This was like the best buying opportunity ever. Was in October I've ever seen for $14. I didn't have any money, but I wanted to buy it, and it just shot right back up. But over its lifetime, you can see that this fund has been worth like $50. So I'm kind of hoping that it eventually go up there, because if you bought up here, it's hard to say if you would have got back your money by now, and I could probably do analysis on that. But this is during the peak when interest rates were low, and because this is a leverage mortgage REIT, I don't know why the value went up, because mortgages were like 0% back then. But now the interest rates are higher, so I'm like, well, will this will generate more money? But it's not a huge fund itself, but it's definitely small. But I do like it. Yeah. So, anyways, that's one of my favorite ones. Not a lot of people play that one. I haven't really actually seen anybody talk about it, but I do like it. Let's see. Under the hood, OPP, and I kind of actually know that OPP and ARK. But yeah, just wanted to go ahead and show you the kind of the under the hood. I did a couple. I think I have XYLDs kind of popular. I found that during the very beginning. You can see I picked it up probably when I started over a year ago, and it's been paying about $100 to $200 per month at 11% yield. XFLT is one of my other favorite ones. Sorry, I was looking for this one. I just started getting to this one. I received finally $1,000, but before I was just getting about 100, and then before that $25, because I've been really pouring into this one. So XFLT looks like it has. I'm probably gonna keep buying until it gets about to $8, and then I might kind of tail off, because it looks like it's kind of capped at this $10. So I think anything above $8 will give me about, if it goes up to $10, that's a huge return on for $8. So I have some growth opportunity, but I really do like this one. It pays out a great dividend rate of 14%. Let's go to the dividends. We can look at that. You can see the dividends have, not always decent. Sometimes they're there, increased a little bit, went down, and went back up, increased, and then increased again. So these are kind of the patterns you want to see, is like this increasing slope of the dividends, or at least stable. And I love that they're monthly. So this is a good one for me to own. This is where I'm trying to put as much money in there. So I'm trying to get this one up to about 200,000. So, just a rough calculation. So if you go to calculator, and you add 200,000 in there, and you times that by 0.14, you make about $28,000 a year. So by 12, that's $2,333. So that's a great way to cover many of the household expenses. So once I get to that level, I think this one will be a major core position for me, along with other ones. I'm gonna keep trying to build them up into functions of, the major core ones to like 100 or 200,000, and then I'll keep playing with other ones in between, and kind of kind of to be playful stocks. But anyways, that's kind of the overview of my passive income investments. I probably have too many funds, and I eventually need to prune. But they're just so much fun to buy. So I call them my tenants. And then of course I have that stable rental property, which has been printing out money about 1,600 since the beginning. It's been a slight increase, and it's going to increase again. So should be getting about $1,800 here, so another $200 gain, because rent typically go up over time. So hoping that I can add more real estate on this side eventually too of my passive income money machine, while at the same time adding more money either into these funds or consolidating these funds into other funds, or them basically balancing these ones out. But yeah, that's my income factory.